Time for another stock review. It's Members Day today. All day we're live here doing members reviews. On Members Days, if you're a member of my channel, you can get a free review, and I'm going to be here all day, maybe 12 hours doing reviews, take some breaks in between. But right now we are doing a very unusual one. It's on the Belgium index, and it is called KBC Group. And we are talking banking and insurance right now. So let's go into it. Here we go. Let's start off with our review. Please tap the like button. This is for our friend Sebastian. Thank you so much indeed who's requested it. Consider subscribing to the channel. We are members only mode, so everybody here probably already is. Anyway, let's have a look at what this is. It's in the country of Belgium. Let me just zoom out a little bit so you can see that. KBC Group engages in the provision of integrated bank insurances. The company is headquartered in Brussels, capital, and currently employs 37,000 full-time employees. The company's activities are divided into the following divisions, comprising retail and private banking and insurance, asset management, private banking in Belgium and Central and Eastern Europe, comprising retail bank insurance and merchant banking activities in the Czech Republic, Slovakia, Hungary, Poland, as well as bank insurance, leasing, asset management and factoring in Bulgaria. Merchant banking consistent of corporate banking and market activities in Europe, and shared services and operations providing support and products to other business units. Each of these units has its own management committee and oversees both the banking and the insurance activities. Its subsidiaries include Interlease, United Bulgarian Bank, AD Sofia, and Tilindus ISIT BV, among others. Okay, let's have a look. Market cap in euros, 26 billion euros. There's the phone number. You want to phone him up? Don't say we don't provide all the information. Phone him up. Say Martin said. Employees, 37,000. IPO, 21st of May, 1992. 6.3% on dividend. Okay, very nice indeed. 6.33. It's a dividend. So it's a banking insurance company. The CEO is Mr. Johan Thys. I hope I pronounced that correctly. My Belgium is my understanding of that language isn't too good. Bill just subscribed to Extra. Welcome to Bill. Which Bill is that? Is that our Bill of late? Anyway, someone just subscribed to Extra. I think it's Bill, but he won't be able to comment. It's a members only, I'm afraid. We are Members Day today for everybody. He's probably trying to go over there. I don't know. Anyway, let's have a look. Now, we've got limited information here because it's not on the New York Stock Exchange, so I can't look at it on Robinhood the way I'd like to normally. But let's have a quick look at, first of all, company profile in a nutshell. That's their words, not mine. Diversified and strong business performance. This is what it's all about. Let me zoom in as much as possible. There we go. Diverse and strong business performance. Geographically, mature markets combined with developing markets. Robust market position in all key markets. Strong trends in loan and deposit growth. And from a business point of view, an integrated bank issuer. In fact, I'll zoom in wherever I am to make it easier. There you go. Strongly developed and tailored AM business. Strong value creator with good operational results through the cycle. Unique selling proposition. In-depth knowledge of local markets and profound relationships with clients. Integrated model creates cost synergies and results in complementary and optimized product offering, broadening one-stop shop offering to our clients. Okay. We want to be, let's have a look here. We want to be Europe's best performing financial institution. Don't we all? We are a leading European financial group with a focus on providing bank insurance products and services to retail. We've already covered that, so we won't go over that again. Anything particularly here? Company profile, high profitability, 49%, 23. Combined ratio, 87%. Net result, three. I think that's million, 3,400. So that's 3.4 billion. I think. I'm not sure of what currency that's in. I think that's euros. Anyway, let's scroll down here. Company profile. That's fine. I don't need to go over any of that for now. Who are we? Before I come on to the numbers, we're about to do that. Our purpose, a bank insurer, I beg your pardon, and bank insurer. Our purpose is to help all our stakeholders realize their dreams and protect them. We aspire at being far more than a bank and insurance. We want to enable and protect the dreams of our clients. Even more, we want to inspire, boost, and stimulate those who count on us day after day. What we do it so others can grow and achieve their respective goals. We enable our retail clients to plan and realize their projects and help them to then protect them. We cooperate with our business clients so that they can grow and develop in the long term. We drive local economy so that communities can further develop. We offer services to their citizens, opportunities for the young people. We are preparing for tomorrow's challenges so that our current and future employees can develop their potential. Okay. That's a bit about it. Let's go and look at the numbers right now. So tap the like button if you like this so far and consider subscribing. We're also going to compare to the S&P 500 in a moment and do a back test. And in fact, we'll do it now, actually. We'll do it now. As this stock is all about dividends. It's not a dividend king by any means. Go back to 2011. That's as far history as we go. 75 cents, 100 cents, 200, 100. So it's unreliable dividends. It's up, it's down. It's not a dividend king or an aristocrat. 180, 100, 200, 100, 250, 100, 44, 100, 200, 300, 460, 100. And now we're projected for 70 cents. So this is a very unreliable dividend. If you're buying it, expecting the dividend payments to be ever increasing, always paying, you're not going to get that with this. So just bear that in mind, okay? Let's look at a back test if we compare to the S&P. If we go back to 2015, which is here, if you put $10,000 in the S&P, you've now got 30,000, right? If you put $10,000 and reinvested those dividends, you got 22. So you've just more than doubled your money, but with the S&P, you've tripled your money over that period. So it's worth mentioning the S&P outperforms, again, the S&P outperforms this stock. So let's have a look. Now, what you can see here, the green line is KBC, and the S&P is in the blue purpley line. You can see that the S&P is far more stable. KBC surged here, fell away, really fell off in macro conditions. That's COVID 2020. Look, boom. Was very, very susceptible to COVID, very susceptible to macro conditions, which means when we have wars or when we have pandemics or we have surprises, this business can be a little bit more volatile. You can see here, I think this was, hang on, let me see what date this was, 23, 24. No, I can't really see that, but in 2023, last year, as you can see, the market did drop, but this dropped much more. So it tends to, when things are negative in the market, it drops more. But when things are good, it doesn't exaggerate either. So it only tends to exaggerate the negative, not the positive. Now you are saying, well, what about that? That looks like a one-off. And that was near inception, 2015. I think that was when it became a publicly traded company. So we had a little pop when it came out, and then we had the follow-up pop, which is what you get with IPOs. But then after that, it's been trading like the S&P, but is more receptive to negative news than the S&P, and then is not as receptive to positive conditions either. So it doesn't perform as well as the S&P. It's a bit more vulnerable. And I hate to say, because Sebastian was so excited saying, I think you'll like this one. I wouldn't invest in banks even if I was buying individual stock. I don't like banking stocks. Banking stocks tend to go sideways. They don't grow very much. They provide you dividends, but they don't have the growth to compensate it. I think with technologies changing, crypto coming online, new legislation to protect from banking crises, I think banks are always going to be around. Banks will always exist, but I don't think banks are an insurance is a business I would like to be in. I have to be honest, even though Warren Buffett, Berkshire Hathaway is all about insurance, isn't it? Anyway, so it's a very difficult sector to get right. All right. Anyway, let's look at the numbers. Intrinsic value is undervalued by 39%. So right now it's cheap compared to the intrinsic value, and the intrinsic value is reliable. So it's undervalued. So it's a good time to buy it now if you wanted to buy it. Okay. Well, best case scenario, 63%. Worst case scenario, 5%. So even in the worst case scenario, 5%. And if we think there's only 8% left in the S&P this year, over the next 12 months, it's not too bad. This may be a good time to buy it if you wanted to buy it right now. Let's have a look at net interest income. 5.5 billion. Remember, rates are about to go down. Will the bank make as much money? Well, they don't earn as much on loans and mortgages, but then they have less defaults either. So rates going down don't always hurt banks. All right, there's positive gains as well. Non-interest income down 17%. Net income is negative 12% over the most recent range. Dropped off. That's why it's good value to buy it now, and it's quite secular, as you can see. Now is not a bad time to buy. What about their and this is obviously in euros, I think. Pretty sure it's in euros. 359 billion euros is assets, 335 billion liabilities, long-term debt, 28 billion. A lot of liabilities here. Okay, let me just go through. Efficiency. This is a very different thing than selling a product. It's completely different. Wall Street are giving you a 20% upside here, 47% upside at best. Worst case scenario, 6%. But considering you're buying it on a discount at the moment, maybe that's not a bad buy and a very good growth, double what the S&P will do. Maybe now's a good time. There's the competition, no short interest. No news. It's not trending. No one's talking about it in the media. I'll be the first here to report news on it. So there's not much to say about this. So I'm going to wrap it up. I can't even show you it on Robinhood, I'm afraid. I don't like the banking industry anyway, and insurance industries, even though obviously, Warren Buffett does, and you can make a lot of money from it. So I wouldn't buy it anyway. If I was buying individual stocks. Right now, again, if I've just compared to you, it doesn't compare to the S&P. The S&P performs well. Now is a good time perhaps to buy it if you did want to buy it. And I've shown you the dividends as well. The chart I showed you here was, because I know people will be screaming at the screen going, but it pays a really good dividend. Yes, it does pay a good dividend, but it still underperforms the S&P. The S&P is in the bluey color, and KBC is in green. So even if you imply the dividends, it doesn't achieve enough to make it viable. I think you're better off owning the S&P. Sorry to be boring, but I think you are. And there it is. I think it's undervalued right now. It's a good time to buy it now. There's plenty of growth in it. It's got a good dividend, but as I say, it's underperforming the S&P. If you think that this company can grow into the future, potentially, it's a potential buy if you like this sector. That's all I can give on this. There's limited information, I'm afraid, for this stock, but there you go. If it had reliable dividends, ever increasing, it would have been a better buy, but the dividends are unreliable. They pay out, but 1 minute they're $3 and next minute they're 44 cents. So you don't know what you're going to get until you get it, right? And this sort of stock is not the kind of stock you trade. You just stay in. So I'd want to know every month or every quarter my dividend payments are going to be the same or increase. Not 1 month I'm not going to earn very much. Because if you're going to buy this stock, you're doing it for a long-term investment as in an income, passive income. Then you want to know that the dividends are going to be paid every month or every quarter the same and increase, not drop away 1 month. So it's not a buy for me. It's a potential buy because of the undervaluation. It's a good time to buy it now if you like it, but otherwise I wouldn't be buying this. Click above my head for more information. Alpha Spread at martynlucas.com. All my links, all my free stocks, all the stuff. Down below here in the description, you'll find all the links as well. Over here, my full Alpha Spread playlist with all my reviews. Down here, Sensei's charts and technical playlist for all his reviews. And that playlist is called Sensei's The Oracle of Investor Street. There you go. Until next time, take care of yourselves and each other.